At the instance, greetings to all Kuwait chapter members on the auspicious occasion of Kuwait's National and Liberation Day, that was day before and yesterday respectively. Interestingly, related to today's topic, there was a news item that I was reading and I thought I'll just make a mention of it, and which caught my attention was a past few days, there was this eye audit software developed by CA Mansi Jain of Udaipur and CA Palak Vasa and IITN Smith Parsania of Rajkot. A software that can complete 3 months audit in 30 seconds. Wow, and I'm really amazed by that. The team's effort, hard work, and skill has got their software to rank in the top 100 startups of South Asia, a project inspired by our Prime Minister's vision of Make in India, Startup India, and Atmanirbhar Bharat. Kudos to these young entrepreneurs. With this, let me introduce today the speakers. We have with us today two eminent speakers who have achieved great heights in their respective areas of expertise. In addition to being such multifaceted and multi-talented personalities, I am proud to say they are my good friends too. But their introductions will follow in due course. But before that, we call upon I would like to introduce a man respected for his down-to-earth approach, a man who made his mark from humble beginnings to leading the second largest accounting body in the world.
इधर से ये U-turn लेते हो ब्रिज के नीचे से और फिर आगे जाके राइट लेते हो.
ICAI. CA Atul Gupta is a staunch leader who has risen to the highest echelon of accounting profession and acquired the position of President of the Institute of Chartered Accountants of India for the year 2020-21 after being its Vice President in the year 2019-2020. He served as Chairman of Digital Accounting and Assurance Board, Board of Studies, IT Committee, and Indirect Taxes Committee of the ICAI. Under his stewardship at Board of Studies, the new scheme of education and training of ICAI was benchmarked in 2017. With deep interest in the research, he is credited for the project of preparation of accrual-based financial statements of the Indian Railways under the ambit of Accounting Research Foundation. He has also been the chairman of ICA Accounting Research Foundation, an extensible business reporting language, India. He has also been director of governing board of Indian Institute of Insolvency Professionals and Registered Valuers Organization. He has served in various governmental bodies in past. He has been the first chairman of the Accounting and Finance Services Sectional Committee constituted by the Bureau of Indian Standards. He has also been member of Government Accounting Standards Advisory Board, Insurance Regulatory and Development Authority. On international front, he is on the board of International Federation of Accountants, IFAC, XBRL, International, and South Asian Federation of Accountants, SAFA, and representing ICAI International Integrated Reporting Council. He earlier had been chairman of the Committee on Education, Training, and CPD of SAFA. Being thoroughly conversant with the professional concerns and demands of his times, C. Atul Gupta has authored many relevant books and has published numerous articles in leading newspapers, magazines, and professional newsletter, and delivered lectures in about 1,500 seminars and conferences. To add to this, there's something which I would pull out from his speech, his parting speech at the award ceremony, which he said that there were 100 items which he had put up in his agenda while taking up as the president of the Institute of Chartered Accountants. And despite the COVID pandemic situation where the world was grappling with it, and despite the challenges that we faced, he was successful in achieving almost 76 of them. So his bucket list of 76 being ticked, that's an achievement in itself. May I now request C. Atul Gupta ji to address the audience.
Thank you. Thank you, Kaiser Bhai, and all my respected colleagues from the Kuwait chapter and the distinguished speakers, Madam Ashwin and Shahnawaz Bhai, and all my distinguished participants. A very good evening to all of you. And at the outset, I will also convey my sincere and deep sense of gratitude to the Kuwait chapter, not only for initiating the many path-breaking steps, but also the part of this journey wherein, as he mentioned, that we could contribute little to the success of the profession, bring new laurel to the profession in the year 2020-21. Friends, I will start from the topic which touched upon by the our chairman of the Kuwait chapter, Kaiser Bhai, that somebody recently developed an application wherein you will say that the 30 minutes audit or a 30 hours audit can be completed in few seconds. It is actually the example, the finest example of the digital disruption. When I used to say that tomorrow the audit will not be of omissions, but it will be of a commission. When the technology will take over, the maker-checker concept introduced by the artificial intelligence, blockchain, and the other robotic process automation. Friends, if I say about the topic which is there for the today, I will just touch upon some of the aspect related to that only. It will take a minute, few seconds only. Yes.
Yes, Atul sir, now you can share your screen. Means I've given you the right.
Yeah, I'm trying to find out. Yeah. So, friends, I will be just touching upon these aspects only, because when we are talking about the new shades of audit, we have to understand that we have to see that not only our professional colleagues are ready for the new age job requirements, but also our firms are getting the future ready firms. So when we are talking about this aspect, I will just touch upon that when we see that what will be the challenges before the profession, before the new shades of audit, or I will say that before the professional colleagues, there will be the challenges in terms of the delimitation of jurisdiction. There is always a new way of doing business. Gradually we are moving towards the reporting on the ESG. I will explain. And then apart from the expectation of the society, the data management and the digital disruption are the important aspect, which I believe that Madam Ashwin and the Shahnawaz also will deal with. And I believe that will be a point which we should discuss at every point of time, every occasion, so that not only we develop the capacity of our chartered accountants, but also we develop the future ready firms which are relevant, which remain relevant in the overall value system. Now, friends, as far as the delimitation of jurisdiction is concerned, you will see this small diagram over your screen, which shows that the overall legal system in the globally in the middle of the slide, you will find the overall legal system in the across the world. But on the right hand slide, right hand diagram is important, which shows that today the GST or VAT, which whatever the name we call, is applicable in more than 164 countries. What I'm trying to convey you, that the time was there when we were reading the law, we were complying the law, which were having the local jurisdiction, even the state-based jurisdiction. But with the passage of time, in the last 10 years or 20 years, we have moved into a situation. So whether it is a VAT, whether it is a international taxation, whether it is a IFRS, whether it is a insurance, risk management, or insolvency, we are complying with the law which are having the global jurisdiction, meaning thereby the procedures are maybe different, but the preambles, the definitions, the interpretation of the various laws are same. So what will happen that when you will have that kind of a situation, that the jurisprudence are being followed in one or the other jurisdiction at the common level. So the organizations will always look for the global advantage of the geographical advantages. They will always look for the geographical advantages, and they will have the global operation, and which required that not only that our firms has to use the technology, but also have to pool the resources and provide and develop the global firms to provide that kind of a services. So what I'm trying to convey you, when the different shades of audit, which are being the topic which is being assigned today or being discussed, is going to be discussed today, that one thing is very, very important, that the tomorrow audit will not be having only the local jurisdiction. It will be the case when the Shahnawaz or the Ashwin madam will be doing the audit, which will, for the organizations which will have the different geographical presence. So there may be the sales department in the Luxembourg, the purchase department may be in the Sydney, or maybe the manufacturing may be happening in India. So then you have to have the understanding, the meaning thereby I used to say the reskilling of skill. And you need to understand what will be the new age jobs and how you will be able to mitigate that kind of a requirement. So one thing which is happening around us, because our profession evolves around the economic development. So one thing which is very, very important, which is happening around us is the globalization of the various law, the delimitation of jurisdiction. And accordingly, we need to understand that what will be the audit requirement, what will be the assurance requirement in the times to come. The another important aspect that is new way of doing business is again having a rapid change. Earlier times when we were studying in the CA examinations, we were having the 5 M's, the man, machine, time, minutes, which is being called as a time management, the material and the money. Now, over a period of time, you will find that the man, machine and the time management are being replaced by the bots. So they have the cost optimization, time management, better accuracy is there. So likewise, the materials today, when we were earlierly sourcing at a local level, now we have a global sourcing, and the money, wherein we were dependent on the public offers, debenture or the term loan, is now moved into the private equity, the venture capital, the strategic funding. So what I'm trying to convey you that now the businessman, because he's looking always for a cost optimization, he's always looking for the efficiency, increasing efficiency. So they are always looking for the new way of doing business. And accordingly, it is very important our professional colleagues that to adapt themselves into the new requirement. So there will be the change in the assurance standards because of the bots, because there will not be any documents which is available, physical vouchers will not be available. You have to create the logs into the system itself. You have to see that how the disclosure standards will will be having a sea change, how the data will be collected, what will be the methodology. And as I mentioned earlier, that it will be the audit of a commission rather than of an omission, and it will be a real time and the cloud-based environment audit will be there. So what I am trying to convey you, apart from a delimitation of jurisdiction, there is always a new way of doing business. Every 10 years, that economy will have the different shape. The businessman is looking for a different style of doing business, because ultimately they are looking for a wealth maximization, the cost optimization, and improving the accuracy. And that required the professionals to adapt themselves into the various activities, including the assurance services they are providing. The third aspect, which is again will be looking for a new shades of audit, is the reporting on the ESG data. When I'm talking about the ESG, it talks about the environment, it talks about the social, and it talks about the governance. So what will happen that the times has come, because you are aware that when the companies are looking for a sustainable investment, even the mutual funds has launched a special product which talks about the sustainable investment, meaning thereby where there is a better reporting on the environment, social and governance, then there will be the better acceptability of the industry, acceptability of the investor to fund their savings into that particular company. You are aware about the Nokia, you are aware about the HMT, you are aware about the Ambassador. All were the very good companies of their times, but they could not be having the sustainability because they don't understand the requirement of the environment, the social, or the even one or the other aspect related to the governance. That's why it will be very, very important in the times to come that how we are reporting the non-financial data along with the financial data. And that is something will be the need of the hour. When the auditors will be doing the ESG data, they will be doing the non-financial data while they are conducting the audits at the one or the other occasion. Friends, likewise, there will be the challenges in terms of the data as well, because the governance will be around the structured data. There will be we need to understand that how the data will be acquired. So tomorrow, when right now the madam or Shanawaz will be speaking, they will be discussing that the time when it will be a completely the cloud-based environment when you will be doing a real-time audit. Now, in that particular scenario, how you will acquire the data, how you will analyze the data, how you will cure the data, and then the data, how being stored and used is something that we need to learn. And that is something very, very important part of our assurance plan as well. Likewise, there will be the structured data, there will be the unstructured data, how the companies are taking the unstructured data to make their decisions more viable into the not only for ESG, but for the other governance aspect, something that will be the part of the discussion. Friends, now coming to the next aspect, which is again a very, very important aspect, that is the technology, the digital disruption. I used to say When we were reading in the schools, it was the ABCD. A stands for apple and B stands for ball. But today, the A stands for artificial intelligence, B stands for blockchain technology, and along with the RPA, the way they are presenting the robot, maker and checker system, practically our routine jobs, our repetitive jobs are getting outsourced to the system. So what will happen, that the jobs which require the more human judgment, which require the skepticism, will be there for the professional colleagues. And that's why I mentioned that tomorrow the audit will not be of a omission, but of a commission. And there will be the new skill sets which will be required. The World Economic Forum, which is given on this slide, will share us a point of worry as well. There, it says that by 2022, there will be job loss of 75 million. And if you see the top 10 declining jobs, on the 2 number, it's accounting, bookkeeping, and payroll. On a 7, it's accountants and the auditors. So what I'm trying to convey you, that when the artificial intelligence, blockchain, and robotic process automation will offer a maker-checker concept, certainly we need to see that what will be the new age jobs and how we are reskilling ourselves to be capable of handling that kind of a job. And you can see that 133 million new jobs are emerging out. And in the first steps, it is the data analytics, which is as given by the World Economic Forum. So what I'm trying to convey you, that tomorrow the audit, when we are conducting the audit, it will not be the old case that but there will be an audit partner, there will be an audit manager and the other audit manager. The audit manager will be replaced by the cyber or the forensic experts. So it is on us whether we reskill ourselves to take that particular role, or the audit manager too will be replaced by somebody expert who is into the data analytics as compared to our professional colleague who is handling that particular job. So what I'm trying to convey you in a sum and substance, because I have only 2-3 minutes available with me, that the future ready reporting or even the assurance services will have the impact of the new way of doing business. There will be impact of the digital disruption. There will be the impact of the ESG reporting, or even you will say the sustainable reporting. So I believe that the Ashwin madam and the Shahnawaz will be they will be addressing on these points, because when we talk about the new shades of audit, we need to understand the future. I used to say the chartered accountant means a person who is awake when everybody is sleeping. It is not only for the purpose of the conscious keeper, but also it is for the purpose that he can or she can see the 10 years down the line. He is a visionary person, or she is a visionary person who understands that what will be the future, what will be the future requirement, what will be the future age jobs. And accordingly, he has to do a new beginning to understand that he remain or within the overall value system, relevant in the value system. And that's why I used to say, let us have a new start. Let us have a new start to understand that the future requirement will be in this 9 direction. There will be more discussion on the CAM, that is SA701. There will be more requirement of the data analytics. There will be more requirement when we will be conducting the audit in the IPSAS environment, that is the audit of the accrual system in the government sector. There will be the more requirement of the data analytics, which talks about the forensic investigations. There will be less of the standardization, but more of the adaptation. You need to understand there will be a requirement of the audit quality. As you are aware that we established the Center for Audit Quality. There will be a discussion on the audit quality indicators in the times to come. And then you have to see that how the non-financial data is getting reported. So how the sustainable goals are getting reported in the financial statement of the various organizations. And that is something that we need to provide the assurance services, apart from our conventional area of the direct taxation or the tax control aspect. So friends, this was all from my side. And for that, I will just request my all colleagues that you need to have this 6-step mantra, that you should have, you have to exhibit a very strong leadership skills, entrepreneurship skills. You have to see that we are not the jack of all, we are the master of one. And within that, we are providing a single window services to the various service recipient by developing the various division for the specialization. We are having the digital competency by adopting the DCMM as being launched by the ICI. We have the strong code of ethics into our organization. And then we are creating the large firm to have the global footprints. So this is all from my side, because I have the 15 minutes. So I try to complete my address to all you in that particular time band, which is being offered to me. Once again, thanks to my colleagues. I believe that it was visible to everybody, and the deliberation was audible to everybody. Once again, thanks to Kaiser Bhai and all the colleagues from the Kuwait chapter for organizing this important program. And not only inviting the Ashwin Bhai and Shahnawaz, but also giving me this opportunity to share some of my thoughts. At some other occasion, we will discuss all these issues in length, because these are the important aspects which our professional colleagues has to understand, that they need to understand that what will be the new age jobs, as being rightly mentioned by one of the report by the consulting firm, that after 15 years, our kids will be doing a job. Out of that, 60% jobs are not in existence today. So we need to understand that what will be the new age jobs, what is the skill set which will be required, how I have to reskill my skills to be important constituent in the overall value system of the economic development of any jurisdiction. So with this, once again, my best wishes to Kaiser Bhai and all the team colleagues who are under the management committee, and also to both the distinguished speakers who are not only, I'm aware about their dynamism, so they will be very useful talk, and it will be a lot of takeaway from their talk in today's deliberation. Thank you very much.
Thank you so much, Atul sir. Atul sir, can you just make me host back again?
Rohit ji.
Thank you, Atul ji, for actually graciously accepting our invite and being our guest of honor for the day.
रोहित जी, आपको
मोर में जाके आप वो नाम में मोर आ रहा है ना, मेक होस्ट पार्टिसिपेंट में क्लिक करो आप सर.
ओके डन.
Thank you so much, sir. Thank you so much, sir, for such a wonderful update on this internal external audit. So now, thank you so much for giving me opportunity to introduce our first speaker of the day, Shahnawaz Khan. So to introduce him, Shahnawaz Khan is the partner in Grant Thornton. He leads the IFRS advisory and head of insurance and energy practice. He is a chartered accountant from Institute of Chartered Accountant of India and Institute of Chartered Accountant of England and Wales as well. He has nearly 20 years of professional experience specializing in financial services, energy and family business. He has worked a number of years in London financial services, market and lead audit and advisory team on funds, bank, insurers, including Life General and Lloyd's syndicates listed in UK, US and Bermuda. He has also worked in the North Sea energy market. Besides leading the audit of large clients group, his experience includes compliance and regulatory reviews, due diligence projects on control and governance framework, operational controls, Basel and SOX compliance. He performed firm-wide quality reviews across the globe. Before joining Grant Thornton Network, he worked with Deloitte in Bahrain and in past worked with Big Four for audit firms in India, UAE, Kuwait, KSA, Malta and UK, and on secondment to other parts of the world. He worked as head of assurance with Grant Thornton, Oman. He has also been the brand ambassador for Institute of Chartered Accountant of England and Wales for Bahrain, member of IFRS 17 Technical Working Group for the Accounting and Auditing, organizing for Islamic Financial Institution, served as vice chairman of ICI Muscat chapter. He is also an established poet and participates in international poetry meet. So if I go on, it will be going on and on. So before exaggerating too much, I will hand over the floor to the expert, C. Shahnawaz Khan. Over to you, sir. Shahnawaz, you have to unmute yourself.
So it's there now. So I was actually praising you. So I'll take those words back now. So I'll rather repeat myself again. Thank you very much for your kind words. So, if somebody like Atul Bhai is there, perhaps, I'm always going to be shorter than his CV, or I suppose, his statue in the ICAI body. Thank you very much for having me. And I was listening to Kaiser Bhai when he talked about the 76, I suppose, out of 100. For me, I suppose the counting must have been wrong. It must be 176 instead of 100. So the way I suppose, Atul Bhai has led the ICAI to the new heights, I've expressed my gratitude and my thoughts. I
totally agree with you, Shahnawaz. Sorry for that.
Yes, I have expressed my thoughts. The ICAI history, if I were to write it, it only can be right, before Atul Bhai and after Atul Bhai. So this is something I suppose we take on pride that, I have an opportunity to know him. and he happens to be from my same state. So the talk of the day, I suppose, Atul Bhai has set the very, good grounds. And perhaps, as you mentioned something about my being in poet. So for Atul Bhai is, मैं अकेला ही चला था जाने बिल मंजिल की ओर, लोग साथ आते गए, कारवां बनता गया. So the man who started it, and you see his vision, I suppose, how everybody come along. The topic for the day, which happens to be, the internal audit, external audit, I suppose, working in the tandem, the better shades of it. So this is a mix of topic. When we started having a chat, me and Ashwini and Khazar Bhai as well. So we were in dilemma actually how to present this session. Should we talk about going against each other? Should we talk about the tandem? And the way I suppose, I've structured my chat is in the end, I would probably prove that, there is a way for both of them to work together rather than, I suppose, fighting it. And my dearest colleague, I suppose the partner in crime, see Ashwini would probably come and then, she will express her thoughts, maybe against me. So let's see how that goes. So the objective, you may find, I suppose, couple of minute chat, would be a little bored, but I need to build up the session, unfortunately. So the objective of the audit, I'm talking about the external audit, that cover the external audit is to express the opinion, which is the true and fair. And that's the primary objective. What is the secondary objective, if I may say so? The secondary objective is the detection of fraud. And that's where I suppose the game changes. I'll come back on that as well. And the stakeholder concept. So I have already expressed it on many occasions. Atul Bhai was there, I suppose, in London when I delivered a session on the audit transformation. Audit has been ever changing, and by the case so, because the stakeholders are changing. Atul Bhai also mentioned something about the new age audit. So the stakeholders have ever been changing, and they are putting a lot of pressure on the external audit. The stakeholder, shareholders are there, directors are there, managers are there, regulators are there. Even our wives, husband, they are all stakeholders. So they are putting a lot of pressure on that. So objective and expectation, there has been a huge gap coming up. Legal requirement of the external audit, because external audit is generally being driven by the legal requirement, be it in Kuwait, be it in Oman, you have to have that external audit to renew your CR purposes. Framework of the external audit. So friends, I suppose this is again a monotonous thing, but the framework is being driven by the IFAC, the IASB, or the international standard for auditing as well. And we have the other stakeholder reports like the corporate governance report as well. Why I'm telling you something which you may already know that, because that's where the real problem starts. As a matter of fact, the ISA's International Standard of Auditing, they have one particular standard which talks about, which is says 315. So this is the review or performing the risk assessment, the internal controls prevailing in the organization before you start your audit. And that's how the external auditor is supposed to pick up the risk. That in that particular framework, you are supposed to have a dialogue with the internal audit. Why the case so? Because most of the part of the world where I've worked in, be it in Canada, be it in USA, everywhere else, be it in Oman or I suppose in Bahrain, we follow the COSO framework. So again, this is a monotonous subject, but everybody may know about the COSO framework, the Committee of Sponsored Organization of Tradeway Commissions. And they talked about the 5 basic principles, which has enhanced to 7 and 8 as well, and eventually become the enterprise's risk management as well. And they are namely control environment, risk assessment, control activities, information and communication, and monitoring. So control environment, or perhaps control activity, that's where the role of the internal auditor comes. So you may not believe if I say so, because I work for all the big 4 firms in the world, and most of the jurisdictions in the world as well. Often the state of the mind of the external auditor is just a tick box. So yes, you have a dialogue with the internal auditor. Yes, we have the dialogue with the internal auditor. Have you managed to review the reports? Yes, we have reviewed it. And more so, it happened when we are just about to finalize the audit. When you're just about to issue the opinion, just to add a tick box exercise. That's where the things are going to go. The new age audit concept, we need to push ourselves. Be the external auditor, we need to engage with the internal auditor. They are the one who has a lot more inside knowledge than us. The objective, we have discussed about it. And another standard, again, we touch base on the International Standard of Auditing. There is another standard called the International Standard of Auditing 66610, which talks about the relying on the work of the internal auditor. So our stakeholders, they recognize the importance. And what they say, so to determine where the work of the internal audit function or the direct assistance of the internal audit can be used. The emphasis on the word is the internal audit function. And what is the internal audit function? Do not get confused. It's something to do with the in-house or outside. Both are pretty much covered, but they are talking about the independence. They are talking about the objectivity. They are talking about discipline and somebody who has an access to those charged with governance. And if you were to use an external auditor work to determine whether the work is adequate for the purpose of the audit or not. And that's a very gray area, very gray area. Often I've seen people, the external auditor, they have no idea what the internal auditor is doing. They don't spend time with them. They don't discuss about the audit reviewers. They don't discuss about the risk assessment itself. And believe me, the standard 610, that's also give you an option to direct the work to internal auditor to perform on your behalf. I have hardly seen this particular task is being ever given to the internal auditor. I suppose in my times, on a two occasion, I'll discuss, I guess, some of the examples, where I took their help as well. But these are the areas, what I believe, having, Atul Bhai has mentioned something about the future of the audit. These are the areas where the external auditor needs to jump in the recent times as well. So just to touch base some of the concepts which I discussed audit functions have touch base independence. So yes, the independence should be there. And most of the internal auditor I come to know in my life, they happen to be the ICAI member already. So there's no question about it. But CIE also have diversified rules and a well-structured rule on those as well. Competencies, they need to be established as an internal auditor and objective as well. And what possible areas, as an external auditor we should give? Risk, judgment, and responsibility. The higher the risk, lesser the alliance, lesser I suppose we can give. Judgment, which is required, again, the external auditor seems to grab those areas with them. Ultimate responsibility for delegation even, lies with the external auditor. So higher risk of assess business statement or significance assertions level, they generally, being kept by the external auditor as well. The biggest mistakes even in happening, when you tend to rely on the work of the internal auditor, we are not communicating to those charged with the audits. Because as a matter of fact, these agreement needs to be in writing as well. So I've seen those instances as well. So now friends, some of the examples. So I tell you when I went to Russia, Moscow, I remember in my days, and it was snowing so heavily. I was supposed to go to Serbia as well from there. So there was a smaller plane, some other arrangements were made. But I was so scared, the snow was that much thick. So there happened to be an internal auditor based in Serbia. So I exchanged phone calls, emails, and asked them to perform the stock count, asked them to attend the meeting on my behalf, with a clear instructions, and they managed to do it. They documented and sent me the meeting minutes. And that, went into my file. So this is one of the classical examples that, how you can work possibly. More recently, there are, something also happening. Why I can say so, because I used to work in Oman as well. If you see the Capital Market Authority in Oman, they've been, coming up with so many good regulations, or I would say that, the law, which is giving a lot of powers to the internal auditor. And it is generally like in the case of, reviewing the financial statement periodically, also made them to attend the annual general meetings and the quarterly meetings as well. So these are the areas where the external auditor, can possibly get involved also. Just to give you a flavor, where the possible areas, could possibly be there. If you just want me to, I suppose, lay down 1 or 2 things is the testing of the operating effectiveness of control. Believe me, internal auditors, they have far better knowledge than us. They work longer duration, with the management. They work longer with the organization than us. So that's one possible area where the external auditor can rely and should rely. Substantive procedures involving limited judgment. As the standard says so, the significant judgment, limited judgment, maybe the analytical review, they can help you. Observation of inventory count, as I mentioned earlier, tracing transactions through the information system. That's one possible area where they also, score edge over the others. Because what I found, as a matter of fact, is the CIA, those who do, they also do CISA alongside as well. And they happen to be a far better knowledge, than the external auditors in this instance as well. And testing of compliance and regulatory requirement. They are the one who the source of the grapevine. They are the one who can give you the heads up. So as a matter of fact, when I perform the risk assessment, now being the partner, I'm not going down to perform the risk assessment. But in my days as a manager, I used to exchange the dialogue with the internal auditor where they feel the risk lies. And I will always get the valuable input from them as well. And in some circumstances, they can also help you to perform the audit or to some part of the component auditors. So I've given you the example that I was based in Moscow and they were based in Siberia. They can perform a lot of work for you, but you need to have a direct communication, something in the writing, and inform those charged with governance as well. Friends, why this topic actually comes into my mind, because of COVID. So many things have changed. The culture of remote working has been, just around the corner. We are getting into the new age, as Atul Bhai has said as well. Perhaps, a little earlier as we would have thought so. Probably after 5 years, we were wondering, things would get changed. But COVID has brought us to a doorstep that we have to change ourselves. And that's where the internal audit can help you immensely. If you work alongside with the internal audit, you can definitely take the leverage of their work. You can give them the heads up to include into the audit universe. I'm nowadays working more in financial services, and believe me, some of the areas like the actuarial reserving, some of the areas of the risk, some of the areas of for example, the IFRS 9 ECL calculations, or be the lease liability, or I suppose anything which requires the IFRS, they have a very good knowledge. The internal auditors also, they can give you the heads up. So these are the areas we can always look upon and extend our helping hand there as well. Otherwise, something mentioned about the ESG as well. This is the future, and as a matter of fact, I'll be having a session, I suppose, in April on the ESG and alternative reporting. That's where also external auditor needs the help of the internal auditor as well. They are the one who will help you in coming across on disclosures requirement, in compliance requirement, because it's still early days for alternative and substantial reporting as well. And more so, we have not seen much of the changes in IFRS and ISAs, as a matter of fact, in COVID. We hardly see, I suppose, IFRS 9 or IFRS 16 or bits and pieces here and there in the default definitions, or in the ISAs, for example, as a matter of fact as well. But I anticipate, as I mentioned something about that audit has always been evolving since, I suppose, 1840 and now. Enron incident was there, and I suppose we discussed about the great capital buying or the American fall of the stock market. There were so many instances. Well, COVID-19 is one of those accident or incident. Soon we'll find the IFRS and the ISIS will fall into that line. They will force you one way or the other to work in tandem with the other professionals. And who could be the best? If there is an internal audit or internal audit function or the third party internal auditor is there, they are governed by the principle of their own institute, which are not lesser or fewer than IAS, Institute of Chartered Accountants, or perhaps Institute of Chartered Accountant of England rules and regulations in terms of compliance. Their education is fantastic. Their objectivity, nobody can question, and they are independent. They have direct access also to the board as well, or those charged with governance. So what's stopping us, as an external auditor, to rely on them? You will definitely gain much more input in terms of risk assessment, in terms of, I suppose, performing your actual work as well, and the specialized knowledge also. I have presented the case, I suppose, as a matter of fact, I was watching a movie, just before the session, at Jolly LLB, part 1. So, Khazar bhai, I suppose I am putting the argument in your court, and you can possibly decide. So, the way I've been sounding it, I like to present a very strong case, internal auditor and external auditor, they can work in tandem. I really respect them because they are the one who knows the organization better than me. We often come there for 1 or 2 weeks and, we have to finish external reporting, regulatory compliance, and so many other things. Internal auditor, as a matter of fact, they are the part of the organization for various reasons. So if you work in tandem, if you rely on them, if you work in a black and white, these are supposed to be performed by you, can you help you on 1, 2, 3, 4, 5? Definitely there is a case for reducing the work as well. The last but not the least, auditing process for both internal auditor and external auditors have changed. Globalization of business, advances in technology, and demands for value-added audits have become very important figure in any corporation. So that's it. So the future is to work together. And my fellow colleague, or I would say, I guess my friend, she's a very good singer. So I would say that, Mile sur mera tumhara, to sur bane hamara. I suppose that's it. So
Shaz, on this, just a little interruption. When you said Jolly LLB, and if I have to interrupt, I think in that movie, Jolly LLB 1, the most difficult role was of Saurabh Shukla's role, being the judge. Acting wise and decision wise. So I can't decide between the two of you for sure.
Yes,
we have to hear Ashwini out. But I think Sriram has some questions for you. We'll make it just a bit interactive before Ashwini takes over. Sriram?
Hey, thank you, Kaiser. Hello, Shahnawaz Khan. Hello, Ashwini. It's good to see both of you here, and really interesting. So, quick background. See, basically, I'm the secretary of the CA Kuwait chapter, and I've co-authored this institute's guidance note on ISA 610 revised. Okay, this basically talks about the revised one. Okay, so direct assistance. So we put together as co-authors a lot of these matter and checklists and all that. But like how Shahnawaz, you rightly mentioned in the beginning, In my own career as a partner in audit partner with both the multinational firms, I've never seen any audits where we really go in and take direct assistance of internal auditors. Very rarely we've seen that, we get into that mode. So I have, without taking much of your time, two things to ponder. So I would like to present one from out of my own publication, this guidance note. I don't see much of this getting on. So maybe because of that background as well, I would like to ask, number one, is that what do you think is expected by the statutory auditors at large from internal auditors so that this 610 publication can actually be, put into use in terms of taking direct assistance? That's one background I'm sure you'll be able to connect. Two, I just want to, this is not a question, but I just want to mention that along with all the other things which you said, there is a very great area which is called this internal control assurance, where in India, we have gone a long, long way at par with the various other developed nations in asking the auditors, the statutory auditors, to give an opinion also on the controls. It's an integrated audit, not only integrated audit, it's an integrated reporting as well, what we do in India, if you look at it. So the controls assurance comes as an annexure to the actual audit report, right? Wherein you give it, in India, it's a true and fair view, of course. So you give a true and fair view on the financials. And in addition, you say, okay, controls, here it is. Now, I think internal auditors can play a great role in terms of giving direct assistance to, stat auditors, we can put it that way, from the ISA 610 revised point of view, in giving this controls comfort to the stat auditor, in a very big way. Now, in addition, countries like in India also puts a lot of responsibility in the board of directors and the management for doing their own controls assessment. So primarily, which basically for listed companies also goes out as an assurance to be given by the board in their board report, along with the auditors giving their opinion also on the controls, right? So when the governance levels are so big, there is no second opinion on what Shahnawaz Khan right now mentioned in terms of, working together, So this is just a point to note, but my primary question for you to ponder, perhaps to take it forward, is what would be the expectations, just to repeat, what would be the expectations that statutory auditors will have on internal auditors so that you can actually put into use this ISA 610 revised by taking direct assistance from internal auditors? Well, that's what I wanted to put forward.
Thank you very much, Bhai. Mujhe laga, I'm just attending one session. So I become rather, audience. I was rather enjoying your talk. And yes, ultimately, you are putting, I suppose, me in a difficult situation because the way I structured my chat, I want to come out clean, out of this session. But you want me to create the controversies, I suppose. So, as you wish.
I'm with you. Don't worry. I'm an audit partner here, so I can go shoulder with you.
As you wish. You also mentioned something about, the other than the expectation, the control assurance, and I suppose true and fair view, and you mentioned about the integrated reporting as well. See, these are very difficult topics. So first thing, your question about the expectations from the internal auditor. As a matter of fact, I've been working 20 years in the audit, being the partner, I suppose, for the last couple of years, and in the senior position, for the last 8 years. What my expectation, from the internal audit? More so in the recent times as well. As I mentioned already about it, if I'm working on a very difficult client, being the financial services, insurance, and banking. And yes, if I rely on the internal auditor, they have the formal education background, their objectivity is not in question, they are independent, and they have a direct reporting line to those charged with governance. I tend to rely more on those. They are the first source for me to perform my risk assessment, alongside, I suppose, with the financial management and the head of the people as well. They should not, have a fare while they speak with me. The other thing is, I would probably, start having the dialogue sooner than the later with them. When I, in fact, perform the risk assessment in the line of the ISIS 315. And it's practically happened as well. Also, I can't give you the name of the client. Recently, I picked up one insurance client from one of the big four firms. And that exactly happened. I started performing the chat with the internal auditor. And I come to know the reason why, the particular big four auditor, they have left it, or why perhaps they've been asked to leave as well. Otherwise, I end up, spending time and hours as well. So this is what we expected. And in terms of, I suppose, your question about the direct, the work, the standard, the way, it's been drafted, this is really, really tough, I suppose, to lend, any work to internal auditor, because there are so ifs and buts that ultimate responsibility lies on external audit. you have to have a signing agreement, memorandum of understanding, hold harmless letter to the internal auditor. And if I were to give, these sort of things to the internal auditor, they will refrain, working alongside with me, I suppose, as free as somebody else can work with. So the standard has to be, little light on that. And as a matter of fact, I work for a global firm. We have our own independent, audit procedures as well. And believe me, they are just cut and paste and copy paste of ISO 315. So they need to change. And perhaps the biggest thing which I feel in this part of the world, having worked in Europe and now here, is the mindset. So mindset is really, really very difficult in this part of the world. They don't, value the internal audit. They don't value, I suppose, their input, and they just take, as a tick box exercise, get the reports, see the audit universe, the risk they are performing, and that's it. And just, 1 or 2 minutes answer, I suppose, on your other things, the control assurance. See, there used to be long-form audit report earlier as well, but audit reporting has been through with a series of changes. Now what we see, the short-form report. So control assurance, unfortunately, seems to be dried up now. Having said that, 712, 710, they've been enhanced to include the other reporting to give a control assurance part as well. And your question is about the integrated report, because that applies to the US GAAP. And that's where, with the financial controller, they have the responsibility to sign in the end as well. And that's, it's a criminal offense, for example, if you end up signing something back. So yes, integrated reporting is the most ideal form of reporting that as an external auditor, I'm supposed to, give my opinion on the internal control evaluation working in the organization or not, performing test of details. They're not even considering of, relying on the internal audit. Sorry, the controls, which includes the internal auditor. Remember the chat which I had about the COSO? So COSO has the entity level control where the internal auditor falls in. Unfortunately, you find a one-page report in, in most of the files. They come down and test, yes, 1, 2, 3, 4, 5, and we then go perform this as test of detail. So I'm a very optimistic person. I would expect, I suppose, in the near future time, we will have a more liaising as well. And that's it. So true and fair view. Unfortunately, true and fair view, so which is, I suppose, a limited assurance or not an absolute assurance. And I don't think so in the near future, this will change. Rather, the techniques will change from, testing some transactions to testing 100% transactions. This is something very much happening, and that's called the new age of it. So I believe, I guess, most of your questions been answered. Thank you very much, for asking difficult questions.
Thank you, Shaz. Rohit?
Thanks, Anvas, for throwing such a interesting light on this audit aspect. So let me introduce the second speaker of the day, CA Ashwini Savrikar. Welcome, CA Ashwini Savrikar, for the session. CA Ashwini Savrikar is an audit and risk professional with about 25 years of work experience in different kinds of audit in different industry in India and Oman. She has experienced the profession from different angles as an auditor, as a consultant, as an auditee, as well as the audit coordinator for the auditing. She has worked with the big four firms like Deloitte and KPMG as well as in the industry, being banks like Kotak Bank, JP Morgan, and is now working with Arabian Falcon Insurance Company in Oman as their head of internal audit and risk department. CA Ashwini is currently part of the managing committee of Muscat chapter of Institute of Chartered Accountant of India, and is the immediate past chairperson of the Muscat chapter. She is also a certified information system auditor, a certified internal auditor, and a CFA charter holder. She has held board position in ISACA Muscat chapter and IIA Oman chapter. Ashwini has recently been awarded a position among top 100 Indian women in finance for year 2000 by AIWMI. Apart from her profession, she is a trained Hindustani classical singer, has won awards, and she sings in various forums. So welcome, CS Ashwini Savrikar, over to you.
I think, sorry, Ashwini, I would just like to add here, that we need one full session on art and culture from you and Shaz.
Yes, correct.
This being a more technical one.
Happy to do it.
Yes,
yeah.
I suppose we're more than happy. And Sriram bhai, you are there now. I guess.
Absolutely, I'm around.
So yeah. That's the lady you should ask question. You picked up wrong guy.
So
already directed
obviously,
the cannons to me. Sure.
Yeah, so I'm the wrong person, you asked. All the very best.
Right.
First, thanks to, I mean, not only the questions, but I think we should listen to you. A common denominator here is a Carnatic performer. So a lot of, common underlinings with the Hindustani, music
Sure.
as well. So we should definitely,
Absolutely.
like how Kaiser said, we should have a cultural session, with Shahnawaz Khan, Ashwini, and, together we should Mile Sur Mera Tumhara kind of, session.
Very happy to be part of it.
Yeah.
Definitely. Right. So thank you so much, C. Rohit, for the wonderful introduction. And respected C. Atulji, Kaiser Bhai, the entire Kuwait team, thank you for having me here. So as Shaz mentioned about external audit, I would talk about internal audit. And today we are here talking about various shades of audits. So we'll talk about different shades, different types of audits, and how they go hand in hand, how they are different. Audit, to my understanding and to what I believe the main objective of audit is assurance, giving assurance. Internal audit and external audit are different in some ways, and yet there are some commonalities. So my objective is to highlight both the differences as well as the commonalities. And of course, I will also touch upon how the internal audit can help or can add benefit to the work of the external auditors. And let's not be fooled by the word internal. I think Shaz also mentioned that internal auditors can be external firms. Yes, they can be external firms, but then they are still internal auditors. So what is the objective of internal audit? Let's go to the basics. I'm sure some of you would know it if you're working in internal audit and have dealt with internal auditors. Internal audit gives an assurance to the audit committee and the board. So the main difference, external auditors are giving an assurance to the shareholders. The stakeholders are different here. The shareholders, maybe they are investors who are making buy and sell and hold decisions based on external auditors' reports. Whereas internal auditors are giving an assurance to the board of the company. So that's one of the main difference. And this assurance is on the risk management, governance, and internal control processes of the company and whether they are operating effectively. So another difference, because external auditors are giving an assurance that the financials of the company as on a particular date and for a period are giving a true and fair view. Whereas the internal auditors are saying that during this period, the risk management, governance, and internal controls of this company have been operating effectively. So how do internal auditors do that? They are giving insights into the company's culture, the organization structure, segregation of duties, conflicts of interest, policies, procedures, all sorts of controls like the maker-checker controls, 4I principles. Atulji did mention about the maker-checker controls and how digitalization would be diffusing them, or how the digitalization would be changing the way these controls would be applied. And I'll come to that a bit later. So simply put, internal auditor is providing risk assurance, or an assurance that the risks of the company are managed well and are under control. We'll not go to the definition as of now. We already covered that. I'll jump to what C.A. Sriram mentioned, and Shaz, my co-colleague, also mentioned about the standard 610 and reliance on reports of internal auditors. So whether external auditors should take assistance from internal auditors, well, what I've seen in my experience when I was working in India in the Big Fours is that when I was in the external audit team, my counterpart in the firm who was in the internal audit team, they would help us in doing the controls review. So this was one way in which the internal auditors were helping the external auditors, I would say. Another thing which I would also, when I was working in the internal audit team in the Big Fours, I was going to the clients for whom that firm was doing an external audit, and we would do the controls review, the controls assessments as the internal audit team, and we would give that comfort to the external audit team who were doing the audit for the financials. Now, what we are mentioning here, and the standard 610 is mentioning, is placing reliance on the reports of internal auditors. That's where I'm coming from. And I would believe that, see, when a statutory auditor or external auditor is giving an opinion on the financials, gone are the days where there are physical records. So it's all about the controls which are put in place. They need an assurance that the controls in the company are working well. And that's where I believe the role of internal auditor comes in, because the internal auditor, as Shah said, they are more aware of what's happening in the company. Statutory auditors are probably coming for 1 or 2 months, 3 months, whereas internal auditors are there with the company throughout the year. If they are in-house employees, all the 365 days. Even if it's an external firm, they're probably working more periodically with the company than what the statutory auditors are. And that's why they would have more insights into how the controls are working in the company. So the control assessments done by them, the risk assessments done by them will definitely give a comfort level to the statutory auditors. Probably how they can use this. First of all, I think they have to ensure and assure to themselves that the internal audit function of the company is independent in the true sense. Only then they can think of or consider relying on the work that has been done by those internal auditors. Once they've assured that, then they can look at the reports which they've given. They can discuss with them about the control environment, take a feel of how are the controls in the company, how are they functioning. This will probably help the external auditors decide the extent of internal controls assessment that they need to do, or the areas that they need to concentrate on. So if they have an assurance that yes, they can rely on the work of the internal auditors, of course, with whatever documents they get signed or the agreement they get signed, whatever. But if they can rely on them, having checked their independence, yes, then they can probably reduce their work on the controls assessment or concentrate on different areas of internal controls or the areas of the business which the internal auditor may not have covered during the immediate past year, for which the external auditor is expressing his opinion. So this is where I believe internal auditors can definitely play an important role for the work of the external auditors. I would like to say that external auditors, the control assessment which they do is more like a movie trailer, whereas the controls assessment which is done by the internal auditors is the full movie. So that's probably the difference of the scope when each of these are looking at the control environment that is there in the company. Various shades of audit, external, internal, that's more black and white, but there are many grays. I'm not sure if it's 50, but yes, there are many shades of audit, and there are concurrent audits, specific area audits, maybe the technical audits, IT audits, industrial audits, quality audits these days, stock audits, cash audits, forensic reviews, so there can be any investigative kind of reviews which have to be conducted, IT security audits. So all these form part of different kinds of audits. That's why we say different shades of audit maybe. How do we decide what each of these audits should be doing? It all depends on the purpose and the scope and the stakeholder. So what is the purpose of the audit? That is the first thing which one needs to understand. When it comes to external audit, it's very clear that you have to give an opinion on the financials as on a particular date, whether it's giving a true and fair view. Whereas when it comes to the internal audit, the scope can be totally different. It can be a pinpointed scope for a particular area. It can be for the entire company. It can be for different departments, a specific department. So the purpose, establishing the purpose of the audit and the scope of the audit becomes the most important thing before starting any assignment. Because that is what will help decide the approach, the methodology, the team composition, what kind of expertise you need on the team to conduct that audit, the time period required, and whom are you reporting to. So yes, internal audit per se is reporting to the board. It is not for the external people, but yes, the external auditors also do rely and should rely on or should take a look at the reports of the internal auditors. Shaz also mentioned that most of the times the external auditors talk to the internal auditors towards the end of their assignment, just to have a tick mark in their probably list of things to be done. But maybe it should be, I believe that it should be the first step that they should be doing, or one of the first steps that they should be doing, because their entire work about the financial numbers is going to shape around how the controls in the company are working. And the internal auditors, if they are independent in their work, are going to provide the best inputs for the external auditors. And internal auditors who are working for value creation for the company would definitely want to contribute and discuss with the external auditors if all of them are working in the best interest of the company. An example, I would say, internal auditors report should be shared with management, the responses taken, submitted to the audit committee. Boards may ask internal auditors to carry specific assignments. External auditors' reports are going to the shareholders and are discussed at the annual general meeting because that's the main audience of the external auditors. And of course, the regulators are asking for the reports of internal auditors and external auditors both, because that again gives them an insight into how the company has been functioning. To highlight a difference between how internal audit and external audit look at the same thing differently, think of an elephant in the room. One is an external auditor, Shaz. He has been asked to stand in front of the elephant and give a picture of, give an assurance or give an opinion on what he sees from there. Whereas an internal auditor, me, maybe I've been asked to stand on the side of the elephant and again give the image, give the impression of what I feel the elephant is. It's a very crude example, but yes, so they are still talking about the same company or the same object, but their opinion is different or their viewpoint is different because they are looking at it from different angles. Legal requirements, yes. So statutory audit or external audit has been there for a longer period, probably has been there for many, many years. Internal audit, the way it is today, is different than how it started probably. Internal audit, I'm seeing the trend that the importance of internal audit and the reliance that the different stakeholders are placing on internal auditors is increasing. So more recent concept, it's firming up. Legal requirements are firming up in most of the places. Oman does have very good regulations around that, and I'm sure the other countries in the region, India and many places, they would also be looking at how internal auditors need to, so the role of internal auditors or how their reports can be relied on. Framework, International Professional Practices Framework, IPPF as we call it. This is a framework which is defined by Institute of Internal Auditors, and it gives mandatory guidance. So just like for external auditors, we have the IFRS standards and we have different standards. So even here, the IPPF does give us mandatory guidance, recommended guidance, implementation guidance. There are the core principles, definition of internal audit, standards, code of ethics. Everything is very well charted and defined in this framework. And this is what the internal auditors should be following. Other regulations, of course, are country-wise to establish independence, because earlier I've seen that internal auditor used to report to the CFO or used to report to the CEO in the company. And even now, I think most of the places, internal auditor reports to the audit committee, but the administrative reporting is to the CEO in most of the places, and sometimes even to the CFO or some other positions in the company. So how to establish the independence of the internal audit function? This truly depends on the country-wise regulations. In Oman, and I keep referring to Oman because this is where I've been working for all these years. So in Oman, the regulations are very clear. And recently, a couple of years back, the new regulation which came in, it said that a head of internal audit of a company should be reporting functionally and administratively to the to the audit committee chairman. So there is no linkage of reporting to anyone in the company. And that, I believe, is helping in bringing about the kind of independence that's required. Most of the places, other places in the world, it is still functionally to the audit committee and administratively to the CEO. How far it is followed remains a question or food for thought for all of us. But yes, to establish that independence, actual independence, and even the perception of that independence is very important. And this will give a more comfort, I would say, to the external auditors to also rely on the work of that internal auditor, whom they can see as more independent. Risks. So yes, there are risks in whatever activities that we do. So what is the risk in doing an internal audit? Like the type 1, type 2 errors, because we use statistics to select samples and all. So there is type 1 error, rejection of true null, and type 2 error, non-rejection of false null. So that is where internal audit may not highlight something as risk, which is actually a risk. So the type 2 errors is something which an internal auditor should be more careful about. Here, is it possible for me to share my screen? If it's possible, then I would like to show one image.
Yeah, sure, Ashwini, you can share the screen.
Okay.
Just check.
Okay. So internal auditors, they go by the, So internal auditors, they go by the policies, procedures, and they look at how these have been followed by the companies. And this is, of course, one of the images that came through the WhatsApp University, but it has a very interesting message there. So this is what typically happens when process becomes more important in an organization than the result itself. So probably this gentleman has been given a process that if you want to remove these fruits from the tree, then you need to take off your chappals, climb the tree, and try and reach out to the fruits and take them down. As an internal auditor, if I'm going by the rule book, by the procedures of the company, that what has been written, then this is a perfect procedure. But is this the right way of doing that process? So I think as companies, what is ultimately important is the main reason why a particular process or procedure has been implemented, and how strictly it needs to be followed has to be left to the judgment at times. I will stop the share here. So because I was talking about the risks that one has while doing an internal audit, and why am I talking about these things is because external audit is pretty much settled. We know that this is the scope, this is what the external auditors are supposed to do. The company knows what they're supposed to do, and they all do their jobs. Whereas it's very fluid still when it comes to internal audit. So if I'm going by the procedure of a company and saying that you are supposed to do 1, 2, 3, 4, and just use a tick box approach and say that you have done 1, you have done 2, you have not done 3, so you are not complying with the procedure, and I give a negative report as an internal auditor, then that's probably not the right thing. What's happening now is value creation is becoming an important aspect. And talking about value creation, so for internal auditors to play an important role for the company, what's important is that they should give a report which helps create a value for the company or helps protect the value of the company. Why do I say protect the value of the company? So it might be protecting the assets, protecting the reputation of the company. So the objective of the audit, the work that is carried out should not be a fault-finding exercise. Rather, it needs to be an exercise which is going to be beneficial to the company. And that's where companies and the management and the board will see value in the work that the internal auditors are doing. And that's very important. Use of special knowledge. Yes, just like Shaz mentioned, external auditors are making use of special knowledge. Internal auditors also may need to make use of special knowledge. Maybe I want to do some highly technical IT reviews or highly technical industrial reviews, engineering reviews, actuarial reviews, vulnerability assessments. And me as an internal auditor or my team may not have the necessary expertise. In that case, the internal auditor should also take help of the external entities or other firms, external consultants to carry out these reviews. Forensic experts maybe. If there are some fraud investigations to be done, then probably it's a forensic experts that need to be used for this purpose. And in some ways, I would say that internal auditors also can use the work of the external auditors. Typically, external auditors issue a management letter at the end of their work. So these are really the control areas, or at least some of them are the control areas which have been pointed out as the lacuna by the external auditors. And internal auditors should definitely take those into consideration. They need to track those because that's again going to feed in information into their own work, because as such, they are giving an assurance to the board on the controls that are existing in the company. So this is how I truly believe that there needs to be and there should be and can be a collaboration between the external auditors and the internal auditors. Recently, the entire world has been hit by COVID, and during COVID or post-COVID, there has been a change in how things are working, companies are functioning. Major change for most of the companies is either part or entire of their staff, they're working from home. The moment people are working from home, it means that less number of people are available in office, and there is an immediate impact on the maker-checker kind of controls. You no longer have your entire team in the office. The paper trail is lost if everything is carried out on electronic documents, electronic means. How do you then carry out your internal audit? How do you still give an assurance to the board regarding the controls that are existing? So again, the internal auditor in such cases cannot insist on a paper document to be presented to give an assurance. Rather, they need to look at alternate means that have been deployed. So they need to convince themselves that how is it that the respective departments, respective teams have worked? How is it that the transaction has flown? How is it that they have ensured the teams, the auditee members, they have ensured that controls are still existing. And based on that, they can give the minimum controls assurance to the board or to the stakeholders accordingly. I would like to bring here the concept of 3 lines of defense, which is what the Institute of Internal Auditor talks about. And the 3 lines of defense, I will also come to the newer version of 3 lines of defense, but this was the original concept, where it says that management is the first line of defense. So the respective department head is typically the first line of defense who tries to ensure that the risks are properly mitigated and the purpose of that particular department is met. The second line of defense is the control functions like the finance, security, risk management, quality control, inspection, compliance. So the control functions are the second line of defense. So after the respective department head, it's a second line of defense who are responsible for proper risk mitigation within the company and to see to it that things are working the way they are supposed to. The third line of defense is the internal auditors. That's where the internal auditors come into picture, where they are looking at the entire company. They are looking at all the functions, all the departments in the company. They have a bird's eye view and they are able to see the collaboration between the respective departments within the company and then give an assurance to the board that yes, things are working fine, or point out that yes, these are the areas where probably some changes are required. And after the internal auditors come the external auditors and the regulators. So this is the entire picture if we can visualize that. This model was changed recently in July 2020, and in the new model, the word defense has been dropped and it now says 3 lines model, where the key areas of responsibility are accountability, actions, and assurance. So these do remain as the 3 areas of responsibility, and definitely each of these have to work in collaboration. So the management, the control functions, and internal auditors as a team within the company, they need to work together in tandem, in collaboration with the aim of achieving the business objectives. And yes, internal auditors, on the other hand, also need to work in tandem with external auditors or take help from each other. They are both professionals. So it doesn't make sense if both of them are checking the same thing. That means an over-auditing in a particular area. And also probably their energies need to be used better to check different areas so that they both can rely on each other's work and they both can benefit from the expertise of each other. So a collaborative approach, definitely, yes, it's required. How to ensure it happens is what we need to probably work on as we go along. Respected Atulji did mention about some challenges, disruption due to digitalization, delimitation of jurisdiction. I would say yes, digitalization is a disruption, but there are benefits too. It will no longer matter where an auditor is physically located, whether it's external or internal. So I believe that this will open up opportunities for us as Indian Chartered Accountants to carry out different kinds of audits for companies and entities across the world, being in the place that we are. This means, again, we need to be aware of regulations governing the respective entities being audited. And artificial intelligence, yes, they say that artificial intelligence can reduce audit. Kazarbhai, at the beginning, he referred to an example, 30 days audit in 30 minutes. Yes, AI will change things, but I truly believe that it will still not change the need for audit. So what is the purpose of audit? As we say, it's giving assurance, right? So when it comes to giving assurance, it's the manner in which audit will be carried out, or giving assurance. For what are you giving the assurance? That is something which is going to change for sure. And consider a company. Companies are becoming bigger, global, bigger in size, more complex in operations. And till the time owners and board and management are different, assurance will always be required. Some one of them is going to require assurance on something that is happening in the company. If it's a one-man business, I'm the owner, I'm the one who's running the business, I'm the only one who's doing everything. I don't need anyone else to come and give me an assurance. Maybe. But when all these roles are different, yes, someone is going to need an assurance about something else. And that's where audit will always have a role. The form, the manner in which audit is conducted, the stakeholders, the purpose of audit may keep changing, but the need for audit will always remain. This is my true belief. Technology, in fact, is going to help us carry out audit in a different way. Probably we need to, so as an internal auditor, rather than looking at the physical documents, I need to look at the electronic documents. I need to look at the electronic audit trail which has been created. I need to look at the access controls. I need to look at the workflow of transactions. I need to look at exception reports. The system should give me exception reports, the kind of exception reports that I want to know, and violations to the rules if there are any. So Shaz did mention about the percentage of audit, the percentage of transactions that we might be auditing. So today, if there are 1,000 transactions, and I choose 10 transactions as a sample based on my review, I give a reasonable assurance. If I'm using AI tools, maybe I can even go up to 100% transactions being checked by way of checking the exception reports. And if I'm assured that the access controls and everything else is working fine, then I can rely on those exception reports and give a more percentage of assurance to the stakeholders. Paper trails will be replaced by electronic trails. It's just that, as Atulji mentioned, we need to adapt to this new ways of carrying audits. We need to adapt to using these new tools and get on with our work as assurance providers, as auditors, whether internal, whether external, doesn't matter. That's it from me. Thank you.
Great.
If I may,
thank you.
Hey, sorry,
yeah.
sorry.
No problem, no problem. You know, one thing which comes to my mind before I let Sriram continue is, while we were talking of external and internal audit, I think both put together, there's a moral, ethical, and professional responsibility on both of them to vouch for the authenticity, the true and fair and correctness of the same thing. It's whether your stakeholders are different, but at the end of the day, whether it's the management or it is the shareholders or the government authorities, for whom all will be relying on the same statements. So whether it's an operational audit or a functional audit or it's a statutory audit, I think working in tandem is the need of the hour. And as you rightly said, that whether you're able to audit or take a sample of 10 transactions or 100 transactions, that is, of course, because of artificial intelligence, we may be able to do it. And somebody did mention, one of the questions which I had, somebody had mentioned, saying that with artificial intelligence and with what has happened at 3 months audit in 5 minutes would mean that professionals would start losing jobs. But as Atulji rightly pointed out, it doesn't happen. When generation 2 and generation 3 computers came in, it never happened. People were skeptical and apprehensive that people will start losing jobs because now computers are in, but it never happened. People learn the new set skills. People have to adapt, they have to innovate and take it forward. So I think that's my take on it.
No, Kaiser, I think you absolutely nailed it in the sense, how much ever artificial intelligence, let them keep coming in. I think there is something called an auditor's judgment. Now, this human aspect can never be replaced by any machine. You know, so with my all my experience of doing this, audit career, it plays a very large role in taking an auditor's judgment. A quick example would be when we were doing all our manual-based audits. You know, I still remember way back, don't want to sound very old, but way back during articleship days, there used to be a specific set of rules for us to find out the difference in a trial balance. You know, these rules would come out from, you know, difference coming to a multiple of 8, multiple of 9. And then if there is an exact half you are able to find in any of the accounts, there used to be a ton or tons of, now where did all these go? These procedures have vanished now with all computers coming in, and non-tallying in trial balance is something not seen at all. It is not there. So therefore, with the advent of newer technologies, only the auditors, what they do, they get reskilled to basically focus on certain other types of procedures. Nevertheless, the audit profession will not vanish, in the sense that is my very strong point of view.
Absolutely.
Ashwini, just coming to your you know, speech, I think was great, and I really enjoyed every bit of it. I just have 2 questions for you, if I may. Just
now, yeah, the question has to be difficult, you know. Please.
Arey, no, yeah. Well, there's no difficult question, of course. It's all, you know, discussion within our profession. See, these 2 are more practical questions. I know we all have seen the theory, how we do and all those things. You know, we have come so far in our careers. One thing is, you know, I like the way you said the external audit gets to see only the trailer of the movie, but whereas the internal audit basically looks at the entire movie, right? That's a very good example. Now, in practicality, let us assume a case where the internal audit itself gets to see only the trailer. The poor stat auditor gets to see only the poster of the movie, nothing more than that. So therefore, this background, why I'm asking this question is more towards fraud. You know, when Shahnawaz Khan very, very rightly said that, you know, it is also a secondary objective of an audit, which is anyway, you know, auditor to auditor, that will be debatable as well. Because some auditors may say, no, fraud is not my scope at all. No, why should it? It's not at all in my, the audit procedure is not designed to really find fraud. So I would like you to discuss practically how internal auditors and external auditors stand vis-a-vis the fraud detection. So that is one part which I would think that it will be benefiting the audience today if we take up that discussion. A second part I would say is the independence, which you rightly covered in the sense.
Yeah.
And independence in both fact and appearance should be there, right? So when you say that internal auditors will have an independence if they are made to report to the board audit committee, you know, that way, that was a very good this thing. Same thing, if you look at the external audit, if I draw a parallel and see there also independence plays a more pivotal role, and it is said that, you know, they report to the shareholders and as such to the board, and therefore their independence is also, you know, kept in place. But in practicality, you know, all that we say in theory is well and good. Practically, do you think we are able to look at this independence, the same objectivity that is there in theory? Example, who decides statutory auditors' fees? I mean, don't come out and don't send people to hit me out here in Kuwait, but let me tell you some very bad facts and truth, okay? Who sets the fees for stat auditors? In most cases, the board, basically the AGM, the shareholders delegate it to the management do it. And we basically negotiate management to, you know, get our fees. And I'm sure with that being the case for the stat auditor and internal auditor, also the fees get actually, you know, fixed by the management. And that is how they are not an employee, but then, you know, the salary is also coming out of that, right? So in what way do you think practically can a stat auditor and internal auditor safeguard their independence in different practical ways? So I think these could be, when you talked about KPIs as well for an internal auditor as well, you know, one could again go back to independence and say, you know, KPI versus, you know, the independence. Do they have a tug of war between themselves? Few matters which possibly you could touch upon. Thank you.
Sure. So coming to your first question, you mentioned about the fraud assessments or how auditors in general or external auditors and internal auditors specifically can play a role in fraud detection or how that area needs to be addressed. On fraud, yes, you and also Shaz rightly said that that's not the main purpose of audit. The main purpose of audit is assurance, but yes, this also comes as a secondary purpose. Having said that, if you look at statistics about fraud detection, there are statistics which say that most of the frauds get discovered through the people who are part of the system itself, they coming out and talking about it. So it's not getting detected mainly through audits. Yes, they do get detected through audits, but the main source is through these people who are part of that system, and someday they feel that enough is enough, I need to report this and I need to come out with this. So whistleblowing becomes a very important aspect. So as an internal auditor, whether the company has proper whistleblowing procedures or no, whom is it that the whistleblowers can go to, maybe the audit committee, the internal auditors, who are independent of the management of the company, and how robust those procedures are, how is the identity of the whistleblower safeguarded. So that becomes very important. So when we say that internal auditors need to audit the procedures of the company, they also need to look at the whistleblowing procedures, because that's where most of your indicators of fraud are going to come to. The red flags are going to come to. And in the theory of internal audit, we also learn about these red flags. So if there are these red flags, as an internal auditor, I need to look at those areas in more detail for any kind of red flags, and that is probably going to give me more insight into probable areas where there could be frauds, probable areas where the controls have been misused or the controls have been violated, and the possible areas of fraud. So yes, during the controls assessments, there could be red flags which could help me point out to the possible fraud areas, and then there can be investigations and finding out whether there is actually a fraud. However, most of the times it is definitely the whistleblowers, and so that's why whistleblowing policy of a company should be available on the websites, so that even the third parties need to come out, your vendors, your suppliers, customers, anyone who feels that something is not right, they need to be given a channel to reach out to people who will address their issues or concerns in the right manner, giving them the assurance that your identities will not be disclosed. So that's one area regarding the fraud aspect. Does that answer your question?
Oh yeah. So I just wanted to have the discussion, going on in this direction. I mean, that's basically not like a proper question kind of stuff, but it's very useful what you said as whistleblower.
Yes.
Large part of the frauds in today's world can be found only with the help of these kind of internal sources, because otherwise,
yes.
And probably if I have to ask Shahnawaz Khan, most of the cases of fraud, the first guy to be pulled up by the collar is a stat auditor. The first question being asked is, okay, who are the auditors? Okay, what did they do? Let's see, did they, write anything in their ML, with their management letter, all this stuff. And of course, internal auditor follows through. So Shahnawaz Khan, please feel free to chip in, and, if you want to, give in your views on this, you're welcome.
You don't want to lead me, I suppose, from the difficult questions. So thank you very much. Yeah, these are very relevant questions. And, the way Ashwini has explained it, that's a perspective from the internal audit perspective, or more so overall assurance. Unfortunately, the rule of thumb follows, as I mentioned earlier, the international standard of auditing that governs the, the way external auditor needs to behave. And we have a very specific ISO 240 that talks about the fraud. So yes, be it the part of the ISO 315, which talks about, I suppose, how I need to perform the risk assessment procedures, which includes the dialogue with the internal auditor, review their internal audit functions as well. But ISO 240 laid down, probably as such, if I remember right, 12 to 13 criteria, which are manual journals, management override of controls, I suppose, transaction passed, I suppose, in the odd hours. So there are, rules laid down. As a matter of fact, when I moved, from the UK and Europe to this part of the world, I found the practices are far, far different, because we were far, far ahead in Europe when it comes to fraud detection, when it comes to, I suppose, the, evaluation of the journal entries. And that wasn't the case up there as well. This has been picking up. So external auditor, unfortunately, drive by those ISO 240 procedures. They're supposed to, pick it from the ISO 315, and that's where the internal auditor role, jump in. If I have a dialogue with the internal auditor with a fraction of, I suppose, a phone call, I can come to know who's, I suppose, she mentioned something about an elephant. I can, see the elephant from all sides. You didn't mention something about the independence also. See, again, there are two schools of thoughts. When I talk about the independence of the Europe, FRC, the Financial Reporting Council, has already picked up this point. And you see that in 2023 or 2024, all the big four firms, or perhaps all the major firms in the UK, they are supposed to split between advisory and assurance. Because the biggest element is the conflict of interest, and which is evident. And when we talk about the conflict of interest in this part of the world, is, I guess, all over the place. Shareholder happens to be the director happens to be the shareholder. They dictate their terms, and unfortunately, the internal auditor, fall under that, I suppose, chopping as well, which I find it very, very hard, because in this COVID time, a lot of internal auditors have lost their jobs, because the management believe, they are not the one who's going to make any value addition, and that's where, the problem starts. Luckily, Oman, for example, the regulator has picked up the restricted and reserved the right of the internal auditor. And more so, I suppose in India, those things have already started as well. How we can possibly control those? Because, unfortunately, I have to give the example, from our neighboring country, from Pakistan, for example, the Institute of Chartered Accountants of Pakistan, the ICAP, they have set out the rule. If a new auditor is stepping in, there are criteria that you cannot go below what the predecessor auditors used to charge. So there has to be a justification behind it. Unfortunately, in this part of the world, it's more a bargain than anything else. So the management choose the external auditor, or suppose they offer you, this is the fees I'm going to offer you, whether you want to take it or not take it. And most of the major firms are following in this trap as well. So you name any firm, it's may not necessary, I suppose, the mid-tier firm. Any big four firm is following in the trap as well. So independence is something, as you mentioned earlier as well, if I remember right, should not be there on the paper, should be perceived as well, which I often find is missing. Still early days. So I still have 20 years of working life, I hope. So at least by the end of the tunnel, I see there is a light, and hopefully those rules which will come up eventually in the Europe and UK as well, they will correspondingly will come across here as well. So, and that's it. So I thought it's a good discussion, and we had heard from the minds and the soul of the people. Shriram bhai, any more question, I suppose, before we call it a day?
No, don't mistake. I'm not here to ask questions. I'm just trying to enable the discussion here among people.
On the independence.
So let's listen on the independence.
Yes.
The second question.
So on the independence, like I mentioned, there has been a changing trend. So I've seen that earlier internal auditors were asked to report to CFOs and CEOs of the company, right? And however, now things are changing. As Shahid also mentioned, the regulation in Oman is really robust, and a couple of years back, they made a change where functional and administrative reporting of internal auditors should be to the audit committee only. So may it be the salaries, bonuses of internal auditors, everything is decided by the audit committee, and management has no role to play in that. In fact, the regulation even goes to say that if an internal auditor is leaving the company, so for an in-house employee, internal audit, head of internal audit, then the regulator would like to have a dialogue with the internal auditor and understand the reasons why the internal auditor is leaving. So the regulator is really playing a role, or is trying to ensure how this function can be made more independent, actually, and as a perception as well. So yes, it's a journey. I think the journey is going in the right direction. And then ultimately it depends on the tone at the top, because if the boards of a company want to have an independent internal audit for their company, yes, they can make sure that it happens. So it boils down to the tone at the top in that particular company itself. So one is a regulation, second is a tone at the top within the company, how it is implemented. So there can be things on paper, the charters of the internal audit and how things progress. And then this again goes hand in hand with the previous question. So if the internal audit unit is totally independent with the perception, that perception has to be made known to the people in the company that yes, your internal audit department is really independent. Once they know that, then they will also be more comfortable in coming and telling you about the issues or about the perceived frauds that might be happening in the company. And I've really seen this happening. When the people know that you are independent of the company and independent of the management of the company, they do come out and they do talk to you about, and some of them might be confirmed fraud, some of them might be their doubts and perceptions. So they do come and talk to you about these issues. Me, for example, in my company, and my team together, we make sure that we have a dialogue with each and every employee of the company in some way or the other, and we ensure that there is a channel. They know that they have a channel to reach us in case they feel that something is not going right, because ultimately each of us have to work for the best interest of the company. And if someone in the company is not working towards that goal or that value addition goal for the entity, that needs to come out in some ways. Again, I would say it goes hand in hand. If the internal auditor is only bringing out frivolous kind of audit observations, that this paper is not signed, and those kind of issues, which are probably, they are probably important issues, but they are not the real issues or the big issues. And if those are the things they are bringing to the board, then the board also may not have that kind of confidence in them. So I feel it's a both way, it needs to work both ways, where the board needs to have that confidence in their internal audit team, and they need to instill the confidence in the rest of the team that yes, this is an internal audit team which is going to add value to the company. The board needs to feel and give the necessary authority to the internal audit team to be their eyes inside the company. And that is what will ensure the independence. So two things to make this happen: the regulatory provisions in the country and the tone at the top within the company itself. It's a journey. I think the journey is in the right direction. So let's hope the internal audit does function in a more and more independent manner as we go along.
Thank you so much.
Is there any more question?
Thank you. No. Thank you very much, Shriram.
Thank you.
Super. So that being the case, let me take the privilege of presenting the vote of thanks. First and foremost, I would like to thank our CA Shahnawaz Khan and CA Ashwini Sarikar. Great work, and thanks for your time. You've taken out your personal time on a weekend, and you have chosen to come and present in front of us. And a lot of matters. It was very interesting, not just for me, but for all the people I'm sure who have attended, to see these different shades of both sides of an audit. In fact, I wouldn't say these are both sides of the coin. These are basically on the same side, I would say. The other side is much different. Let's not go to it, but these are like on the same side of the coin, two different halves. That's it. So that way, I think it was very, very enlightening, particularly all the examples being shared and all the practical, current difficulties that were being discussed were fantastic. The elephant example, for that matter, superb. And when I saw the topic like different shades of tick, I only remembered way back in our articles, we used to have a concept called Jill tick. I'm not sure how many of us have, heard this term way back. Jill tick simply means how many ticks in which different shades and colors you do and different shapes.
I'm from that era,
Yeah.
So,
different color
Right.
pens to be used.
Different color pens, and we say this is for totaling and this tick is for cross-referencing.
Exactly. The vouching and the casting ticks used to be different.
Vouching and casting ticks. And it was really not as boring as that. Today's session was very interesting, and I thank both these speakers very much. And my thanks also goes to the sponsors for our chapter. So if I have to name them, Almula Exchange, NBK, BDO, and Oracle are our live sponsors, annual sponsors. So thank you very much for their contribution as well. And a big thanks to all the members. And I can see it's like, 55, 56 plus connections today. And it's been fantastic. And thanks to all the members for making it as well. Thank you so much. And have a very nice evening.
Thank you very much.
Thank you so much.
Thank you, Shaz. Thank you, Ashwini ji. Thank you.
Thank you, Ashwini, and thank you, Shaz bhai.
Thank you very much.
Thank you, Kaiser bhai and the entire team. Shriram ji, Rohit ji. Thank you so much.
Thank you.
Thank you.